following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. We got our man, Mr. Larry Pesavento, in-house today, folks. It's a beautiful thing.
Looking good, Billy Ray. Feeling good. Good to see you, Tom.
I love it when you start off like that. Let's look at one of our 4 agreements. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you what they want, and you have the right to say yes or no. So, we got a dead market, Larry.
Well, it's only resting.
It's resting.
Yeah, it's resting. We're waiting for the next peace talks or a thermonuclear war, one of the two.
There you go. So right now, folks, we get the Dow Industrials up 17, Nasdaq's down 1, S&Ps are up 2, gold contracts down $13.10 to $12.77. We get the silver market. We'll get silver. They're whacking silver. They love whacking silver, don't they, man?
Yeah.
When
it goes, it drops 20 cents at a time.
It does. So down 48 cents, $16.44. You get the copper market down 2 pennies, 2.88. Light sweet crude flat, 47.60. Notes and bonds. Now, this is what we're going to talk about. Yeah, you see, Larry comes in, folks. We've been going through this for so many years right now. It's insane about the note and bond market. Yep. Exactly. Now, Larry brought a present with him, I think, for himself, because the note market and the bond market, well, geez, they were going down. Let me see this. They were going down on volume this morning, but they might have died in the vine. Yeah, they did. Interesting. Okay, so the note right now, the note is down 12 ticks. But it's going to need more volume than that, man. You're down with 1 million contracts, but guess what? You're going into 1.3 million. You're going into 1.4. So guess what? They still want higher price.
I expect your opinion, however wrong it may be.
Isn't that? I love it. I love it. Isn't it crazy, though? I mean, folks, it seems that anything and everything you'd think about that rates should go up. But the bottom line is that you can look at this chart. I can bring this chart back 30 years. And guess what? The last time that we took a swing point out in the bond market is 2000. Isn't that crazy?
Yep.
And then if you look at the actual rates, the bottom line is that, our rates are high. The top rate there is our rate, 2.2.
That still shocks me.
I know.
Yeah, how you could be higher than Italy and some of these other places. It's just amazing.
And a great place to visit, but they don't have any money, right?
Yeah, that's right.
There's no doubt. You must love Italy, man, right?
Yeah, well, I like Italians. It's almost like being from Ireland.
I do, too. I know. I love it, man. I'm telling you, man. I love Italy. I think Italy's a phenomenal place, no doubt about it. Gold market. So let's look at this gold market. So where are we going with gold?
Well, we had this thermonuclear war fear, and the gold couldn't only move $10, $15.
Right.
That's not like gold.
Right.
And silver's lagging badly.
Right.
It's 70 cents from the old high. So, and you have a triple top in gold. So, we were feeling that you were not going to stay much above 1,300. We got to, what, 1298 or something?
Yeah, because when I was listening to you, it came up to one of your numbers, too, right?
Yes, it hit spot on. Yes,
right.
We got up to that 1297 and backed off a little. But, anytime if gold does get above that 1340 level, boy, it can get to 1440 very, very quickly.
And if we go over to silver, folks, this is You know, this is not bad. Okay. It's down 40 cents, man, but there's only 10,000 contracts on this one. So 1 second. That's the December contract. SIU7. It's interesting when they do that. Okay, so if we stay with September, that's 9,300. That's still not bad. It's not great, but it's coming into 100,000, 107,000. Doesn't look like it's going to crack.
If it can hold those levels, it's got a relatively good chance for another bounce. Yeah,
right.
Because everybody's talking about this level, that's for sure. But when you look at silver and gold together, it's pretty hard to be bullish on silver. It really is.
Listen, I agree. Well, you know what's interesting, folks, is that so the GLD, the 13F filings came out yesterday. So the 13F filings is all these big funds. They have to say what they've owned as of the 30th of June in this case, right? Now, what was really intriguing was the aspect of Ray Dalio, which is Bridgewater, right?
Yep.
He came out last week and said that, you know, when gold was actually already moved, that people should own 5% in the gold market. And, you know, every time I ever hear anything like that, what ends up happening is I say, you know what, man? Is he moving his own book, right? But I want to show you something, that he actually went in, here's Bridgewater right here, he went in, and he went in the last quarter, and that was a brand new position. He bought 577,000 shares of the GLD.
It's a lot of shares.
It's a lot of shares.
Yeah.
You know, so, you know, we'll see where this thing shakes out. Now, what also happened is this Fidelity came in. Now, when you take a look at the top of this, Bank of America came in, so BlackRock is just the ETF. I don't pay much attention to them, but we buy and sell ETFs. That's going to be BlackRock. But these other ones, you know, Fidelity's a trader. You know, the amazing thing is that, you know, when you look at Fidelity mutual funds, but they trade gold like crazy, man. They trade these gold equities, all of the above. Silver. Let's well, actually, how about oil? Go over that oil market. Take a look at oil.
That still had a hard time getting above $50 a barrel. I still think it's going to have a rough time.
Yeah, and it looks like, I mean, we get a lot of oil, man, right? That's the bottom line, you know? So we're at 47.74. You know, a bottom line is that we take a look at a longer-term one. It's pretty amazing. I mean, you know, when we go back, it seemed like we were going to pay $100 for oil forever. But look at that chart, man, right?
It's had some trouble above 50, that's for sure.
Yeah, and you know something that I learned from Larry, folks, which is, and this is something you want to really wrap your head around. Wide price bars are a disaster. Down, and they're great on the way up. You don't. And just look at that chart, man. Look at that. You talk about wide price spread, right?
Yep.
Pretty amazing. So we're coming up to, we got, well, first off, I want to thank you for a great show. You're a great guest.
Is it okay if I say hello to two new traders?
Say hello. We're going to be coming right back to
Avery and Mitchell Luck are going to be two soon-to-be traders. I want to say hi to them.
That's a beautiful thing.
Making sure they're okay.
You stay right there. Larry and I are coming right back. We're going to kidnap them for another segment.
No problem.
We're at Dow Industrials right now, up 21, folks. NASDAQ is flat. S&Ps are up 3.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Larry Pizzamento, Tom O'Brien. We do appreciate you growling and prowling with us out here. Now, don't forget, folks, Larry has an amazing show. He kicks us off every trading day right here at TFNN, 9 o'clock in the morning, Eastern Standard Time. So no matter where you are in this great country or this great world of ours, remember you can go right to your cell phone, TFNN.com. You just hit Tiger TV. Larry's also got a great newsletter. It's Fibonacci 24/7. You can come over to our website and test drive it 30 days right now, absolutely free. And so when you're doing your program in the morning, it's what, 7 o'clock your time in the morning, right? Would that be right?
No, it's 6 o'clock.
It's 6 o'clock.
3-hour difference in Tucson, so I go from 6 to 7, and then pretty much done for the day after that. Well, not quite, but close.
But you're sending charts out all day and all weekend.
Well, that's what I like to do. You know, I've been doing it for so long, and now with the internet, it's so easy to do it. You know, before I used to use a thermal fax many years ago.
Yeah, right.
You know, that was...
different ballgame.
Back in the days of the Neanderthal traders.
I love it. So one of the tigers in the den want to take a look at soybeans. So let's see what we got here. So soybeans, you're at 924. This is going to be interesting. So this is coming back right into the strength where it took off from. Look at that.
Yeah,
921 is where it took off with 200,000 contracts, and you're only coming back with 108. I mean... That's kind of a classic. I like.
Is that the November contract?
That is the November contract. Yeah.
Okay. Well, it's going to be interesting what happens for here. That's
no,
for sure.
It is, because that's a nice time in the trade setup. You break out. You go from, that was quite a move, man. So you went from 917 to 1047, and then they just took them apart. That last WASI report, they took them apart.
That was the grain report. And of course, we had the false weather report, you know, where the weather was bad for 2 weeks. And then it turned really good, and, you know, the crops come in and markets go up and down. So
that's pretty wild.
Now, if we get a little bit of a frost, they'll go back up again. So
yeah. And let's see. So we got, since we have Larry captive here, folks, we're going to have to go through all these. We're going to go into wheat.
Yeah.
So wheat, we're at 456. Oh, look what happened to wheat. Oh, that's interesting now. That's a different animal, isn't it?
That's digging down, like, made new lows for the year. It's below the May lows, which is what you like to see if you want to wait for a turnaround. But you must wait for it to turn around. The good part here, you know, we look for these really wide bars on the downside. We're not seeing it now.
Right.
So the market is just rather quiet, and there's new selling coming in. But right now, this is the wrong time, you know, to think that there's going to be any weather problems. As we get closer to end of October, yes, but not during the middle of August.
Now, and tomorrow, you have Rich on tomorrow, right?
No, tomorrow I have Bill Meridian from Cycles Research in Vienna, Austria.
He's cool, man.
He really knows what's going on. He does a great job, And,
right.
Of course, all my guests do. You know,
they do.
You know, I had Mark Leibowitz on today from Volume Universal, and he told us more about Bitcoin than I knew in the 9 years since it's been going on.
I know, and
it was very interesting.
So check this out, right? I'm coming into work, and I'm listening in my car, and before I know Mark's voice, and I cracked up, and I says, "Oh, that's Mark Leibowitz, man." Mm-hmm. Just tell. Let's see, who do we got here? Let's go to Jim in Palm Harbor. Hey, Jim, what's going on?
Oh, I was just trying to find out if Larry's going to relocate from the heat in Arizona to the humidity in Florida.
Oh, there's a lot difference. You know, over there it's a dry heat where the skeleton's dry right on your bone. Here they keep you alert for a while with the humidity, but it's very nice. We love it here. The good part of it is the air is so clean and the people are so very, very nice. We like Florida a lot, so we're having a great time.
That's great. The reason I'm calling is I wanted to ask, I know right now until we clear that 1,300 on gold, you're maybe negative, but my question is about physical gold. Most coin dealers around here don't have inventory. If you want to go buy a St. Gaudens or you want to buy an 1880 coin, and so my question is, I've been picking them up. I've got a dealer that will sell me, 90% of the melt value plus a spot price over it. So I've been picking up like 1880 coins and 1920 St. Gaudens. Would you continue to do that?
Yes, I would. I've been doing it for 40 years. I wouldn't change it. You know, they don't make the stuff anymore. And when you do come to want it, there's not going to be a lot of it available. So I recommend folks that don't have a lot of money to own a little bit of silver. If you have a little bit more luck in your life, you know, buy some gold and hang on because, you know, I've been watching it since it was 260. Well, it first came out in 1972 at $98 an ounce, and I think in 2002 or 2003.
Yeah, it went up to 880, then down to 252.
252, right. And then back up to 1960, 1920, 1932. So I would still hold on, Jim. I like gold as a physical metal
now, Jim,
for sure.
You're not buying collectible gold, are you?
Yes, Tom. I just bought a $1,900 $20 gold.
Oh, numismatic gold.
That's dangerous, man.
That's art treasure stuff. You have to know what you're doing there because you know they use sliders. You know.
So yeah, but what happens there is this: is that if you're going to buy those, right? If you're like a bull in the gold market, what happens is when the price of gold goes up, they actually go down. Just so you
I can understand it because then they've got an inventory that they bought $100 cheaper that they want to.
No, what it is this. I've done both, okay, and I've owned a lot of both. It's cool what you're doing, but you just got to be cognizant of it because you have to sell those before gold really goes higher. Because when gold was at 1900, right? Those St. Gaudens, you know, they had a premium, let's say $350 at one time, right? Those premiums got crushed down to $20, $30, $40 because it didn't matter because what mattered is what the gold content was.
That's correct. Yep.
You know?
Well, I'm not talking about the slab that are MS-62 or 65s. I'm just talking about a almost uncirculated $1,900 $20 gold piece that had $1,200, $15 worth of gold.
I mean, that's my point. As long as you're not paying me the premium, that's fine. But
okay, which leads me back to the eternal question: what is the platinum market telling us that we're going to be all electric cars 10 years from now and we don't need platinum?
No, I like platinum. I don't care what it's telling me. I'm buying platinum. You know, I would swap the gold for platinum because you can go, you know, right now basically 4 gold for 5 platinum. Right? I did it. You know what I mean? So it's.
And no one has platinum in stock. Any coin dealer in town, you look around.
Yeah, but you can just call up Belair. He'll order it for you. He ordered it for me.
There's a reason for that, Jim. It's really hard to assay platinum. So someone can show you a platinum ingot. Unless you know what the assayable value of it is, you don't know it's really platinum for sure. With gold and silver, you can tell, you know, by the physical properties and by using a small hammer to tell whether it's really gold or silver. You don't get that at luxury with platinum. So you have to be extremely careful with platinum.
Okay.
That's why it's a discount to gold. That's one of the reasons. You remember years ago, it used to be a $300 premium platinum over gold or more.
You can still get coins, though. You get, he's in Palm Harbor. There's a guy.
Well, he knows what he's buying.
One of the biggest dealers in the whole country are right down the street right here. and you can get platinum coins.
That's your O'Brien Coin Company?
Yeah, well,
that's okay.
I've done plenty of business with them, for sure.
Larry, how long will you be in town?
I'm going to be here for almost to the end of the month.
Great, great. I will go to Suite 666.
Cooking, brother.
618.
Hey, thanks a lot. Thanks a lot for calling in,
man.
Jim. We appreciate it.
Have a great day.
Have a great one, man. Have a safe one. Yeah, so Bitcoin. Oh, my God.
Yeah, hard to believe.
It is hard to believe.
I met a guy in London, Tom, that bought an original when it first came out at $100 or whatever it was.
Yeah.
He put $1,000 into it.
Yeah.
When I met him in May of last year, he was up. It was $120,000.
Oh,
$1,000 that he bought. I mean, it's unbelievable.
It's up 400-fold in 1 year.
Yeah.
Unreal.
It's hard to believe.
Stay right there, folks. Larry and I are coming right back. Dow right now is up 22. NASDAQ is flat. S&Ps are up 250. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Larry Pesavento, Tom O'Brien. We're looking at JCPenney, and Larry just gave me. Larry knows everything, folks, and it's so freaking cool. No, it is. And so if you're watching Tiger TV, look, this is going to be amazing what we're talking about. If you're watching Tiger TV, folks, so I just brought JCPenney up, right? And what's happening? Look at when they went public, October 24th, 1929.
Yep.
And this equity, folks. Okay, so. It's trading at 366, and if we bring this chart back, the most I can bring it back, I think, is 50 years. Yeah, 50 years. What you're going to see is that, at one point, well, what year is that? That's 98. It traded as high as 78. It goes down to $8.60 in 2000. Goes all the way back up to $87, and now looks like it's going out of business.
Yeah, well, it has a rough time. Most of the stocks that go under $5 a share have a very, very poor history of coming back.
Right. So J.C. Penney, what's that stand for?
J.C. is James Cash Penney. His middle name was Cash.
That is wild, huh?
And that should be credit, because that's what they need right now. And they're going to have a hard time getting it, it looks like.
That is awesome. Oh, we got a great surprise for us. Basil Chapman, what's going on? We got Basil.
Yes, I'm here.
We're going to get you down here. We need a threesome in here.
Yeah, Basil, how are you?
I'm good. How are you, Larry? Good to see you.
Look, we got him up and everything.
He's in rare form, my friend.
Hi.
And then, hey, listen, and that's tomorrow night.
Tomorrow night, yes.
Tomorrow night. So tell us about your workshop.
So actually, in terms of timing, this is really terrific, because what we've got is the title of the 2 webinar series. I had the first one 2 weeks ago on the 2nd of August.
Yeah. And
on Wednesday, and we're having the second one tonight. And then I had follow-ups every single day with my newsletter, the opening call. And really what I wanted to do was to study the different sectors and to say, since the summer of 2010, we've had rotational corrections, and that essentially says that although one sector that was doing very well took a breather, there was always another sector to buoy the market, to balance the market, so that you had basically a high-level consolidation. Instead of having those 20, 30% corrections, it was just small. There was 22% correction, but most of them have been either small double-digit or a single-digit.
Yes.
So the question I had for myself quite some time ago was, going into December of 2017, every correction that we get through the year, is it going to be this rotational aspect? And look, I've got the SMHs right here. And look, the SMHs made the Semiconductor Market Vectors ETF, made an all-time high at about, that was back in June. It went to 89.72. And it's pulled back. It went down to 84. And here it is at 87.11. It is holding extremely well. And yet there was stocks within that sector that had really a parabolic move to the upside.
Yep.
And this displays... NVIDIA, perfect example. And this displays visually what's going on. And you can see what's happened here in this this triangle that we're looking at, how the apex is coming up. It's getting narrower and narrower, and yet with the technicals, the MACD and the moving average and the stochastic, very weak. The price is held above the 9-period moving average. And that is demonstrated beautifully in the Dow. When you've got such a mix, the financials suddenly are holding the market up quite well. You've got the MasterCard and Visa and American Express doing extremely well. You've got Exxon struggling and CVX struggling, the oil, multinational oils. And that's essentially what the market's about. So this webinar tomorrow is going to look very closely at the sectors, which is what we've been doing, but it's now the decision that has to be made. Is the semiconductor sector, is it ready for another rally, or is it just going to be a mere pop-up and then it comes back down? Is it going to be really maybe a 2-3 month continuing sideways cycle? What is weak? What is strong? So this is great. And what we've done ever since the day after my webinar on August the 2nd, for instance, I like to always have a stock that we have as a demonstration of the Chapman wave. And we're always looking for that leg D to the upside. So this is a stock I spoke to you about the other day, Two Harbors Investment Corp, a REIT management company. We bought it on the 2nd of August. And here it is, leg C goes up and it goes to the leg D yesterday. It's got a peak D today. So it's met all the requirements of what we were looking for as a demonstration, which is a stock we also happen to own in the newsletter. But it also is a demonstration of the technique of this cup formation. Here it is on the left side, going from the 1051 high on the 21st of June all the way down to 958, and then trying to identify how the technicals were strengthening as the price was running up and there you've got it. And the objective now that we've got the Ds to see if we can fill in the gap, because I like to see gaps filled on the upside. So this is a demonstration of technique, as well as trying to put it together as a whole potpourri of different technicals. For instance, we own automobile stock. You would think that it's just been clobbered, but it hasn't. It's actually done quite nicely so far for us. And that's this crazy market that...
You know what's amazing, Basil, is that, you know, when you have the oils, which you brought up, ExxonMobil, Chevron, the banks, they haven't done anything, and we're still at highs.
They're still going.
It's pretty amazing.
See, that's my point, that this rotational aspect, and I had said about a year, I think it was about a year ago, I said, for me, the Dow, in 2000, when the Dow went to its high, I think it was like January the 14th of 2000, the S&P and the semiconductor index and the SOX index and the S&P went all the way to March. And all that money that normally, traditionally, over the decades would go to the Dow, went instead to the NASDAQ. This is the first time I'm looking at the Dow, and I say, you know, the Dow this time could really continue to be a leader. It's got that crazy mix. I mean, you know, it's got Home Depot. It's got the banks.
Because of the way that it's loaded, meaning high price stocks, and just make it go higher. That's pretty easy to do, right?
Correct. And they bounce the ones that they don't like. Usually their timing is not too great for that. In fact, funnily enough, the ones they put in usually have quite a decline before they really get going. But yeah, I think the mix is very interesting. So those are the things. I'm also putting together something that talks about the millennials. I don't think the millennials are in this market the way that you had seen back in the comparable period of 2000 with young people getting into the market. And I think they will still get into the market. So I'm looking out. I'm still very positive of the market, looking out. I think we're in this very choppy period, and that's what we have to define. And hopefully that's what I'm going to be presenting tomorrow night in an articulate way.
And folks, the way you come into the workshop, you just come over to our website at TFNN. You're going to see Basil right on the front page. Opening call, second series webinar. You can test drive his newsletter, 1 month absolutely free, so you get a great newsletter. As soon as you do that, you're going to get the webinar that he did on the 2nd, and then, of course, tomorrow night. And one of the second was an hour and a half, the one tomorrow night's an hour and a half. So you're getting 3 hours of education, great newsletter for a month, and you're test driving it, folks. So check it out. Get over there to TFNN. And, of course, every trading day right here at noon, folks. Basil's got a great show. No matter where you are, you can tune right in. Cooking, brother.
Thank you, guys. Good to speak with you.
Good talking to you, Basil.
Have a great one, Basil. Have a safe one. Stay right there, folks. Larry and I are coming right back. Our phone number is 877-927-6648. Dow Industrials right now are up 24. The NASDAQ is up 1. S&Ps are up 2. It's all green, Larry. They just went to Sherwin-Williams. They bought the green.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Dow Industrials right now up 27. You get the NASDAQ up 2. S&Ps are up 3. And bottom line, folks, the market went out, got the Sherwin-Williams paint once again. And we're going to be all green.
Well, before the end of the day, most probably only, what, another 15 minutes or so?
That's it. That's it. So let's take a look at some of the higher volume stocks out here today. Dick's Sporting Goods is getting smoked. That baby, let's see, where should D? Oh, that's interesting. It got out of the, here. D. I think it's XS. Yeah, DKS. Okay, so Dick's Sporting Goods, and Larry, and I, we were just talking about Amazon. We both use it a lot, and it's like, you talk about gaps down, huh?
Oh yeah. Well, I told you it was going down way back in May.
Yep. Look at this. I mean, this equity, folks, this is pretty intense, and $62 to 27, and I have this on a weekly, so it's only Tuesday, right?
And that's in an up market.
Yeah. Yeah. Right. And look at the size of this bar, folks. $35 to 27. You put this on a monthly, and what you're also going to see is that this is trading back now at 2010, September of 2010. That down elevated, man. They just, it's just fast and furious, isn't it?
That's for sure.
And yeah, a couple of targets saying, I want to look at that too, because Nike, Nike's at 58. That's not as bad. Nothing. That doesn't look like anything like Dick's.
Oh no, they're totally different. Yeah. That's for sure.
And Under Armour, I think, is looking like Dick's though. Okay. Under Armour is at 16. That is. Ooh. Let's see. Yeah, that's a disaster. Look at that. Wow.
Yeah.
So that's just a one-way. That's been a one-way trade. They must have $46 to 16.
46 is, I think, when the initial offering came out.
It must be, because that looks awful new. Yeah, 2005. It went out at 13, gapped up. They did a secondary at 34, and then isn't it amazing? You get a couple of these gaps up, it comes back, and then see you later.
Yeah.
Now, the JCPenney's quite a trip.
That's hard to believe, but you stop and think what's happened to the Sears. They're going down together.
Yeah.
Montgomery Ward's already been gone. You and I were young. Montgomery Ward and Sears.
Sears was huge.
Sears was huge.
You know what's amazing thing about Sears, too, folks, okay, and is that Sears, they were like the original Amazon. They had the catalog.
They were the ones
that
that
order it in the catalog.
They went to the malls,
right.
and Montgomery Ward stayed downtown.
Okay.
And, the country was expanding into subdivisions,
right.
and that's where Sears was in the subdivisions, right. and no one went downtown anymore. So Montgomery Ward went tapioca, and now J.C. Penney's is just and Sears both. They're on the way out.
No,
they just can't compete.
And then, if you look at Macy's, and Macy's is an extraordinary store, but guess what, folks? That chart is also saying you're going to $5. So here's the high volume low, $5.07 in 2008.
Yep.
And guess what? If Macy's is going to $5, they're all going. Because Macy's is a great store, folks. But you know what, Art?
There'll be a new concept come out, though. Somehow, I don't know what it'll be.
I know.
But it'll be something
because our shopping habits have changed.
Well, women love to shop, and they're not going to stay home in front of the computers like you and I. So
no, right.
Something will change, but what it'll be, don't know what it'll be yet, but we'll find out.
And so, for all you folks out there, that's the good thing to think about. Because if you can figure out what we could do with the malls, whoever figures that out is going to make a lot of money.
Yep.
Because those malls, are in trouble. So Tucson, what's happening in Tucson? Is it growing?
Yeah, it's growing. We have 1 million people, and it's a nice community. And we're only 72 miles from the Mexican border. We do have a little bit of problem with people coming across the border, but it's it's not an overflow.
Right.
But they watch it pretty closely.
And you get to go to Mexico quite a bit, which is nice, right?
I was there 13 years ago, and that was once too many.
No, that's too funny.
The border towns are pretty tough, but if you go into Mexico, into the mountains of the silver mines, Guadalajara, and Sonora, those places are still absolutely beautiful.
Right.
And there's not any crime there. But if you get near the border towns where the drugs are, that's where the danger is. And you stay away from that. That's just you just don't want to be there.
Right.
It's just not worth it.
Because that's the Wild West, though.
We can still carry firearms for sure.
Yeah, right.
Sarah still carries her 3 guns all the time. One in her purse and her garter holster and her shoulder holster. No, she doesn't really do that. But everybody has guns. I mean, it's just either in their pickup truck or the back seat of the car.
Yeah.
Sure, it's wild, wild west still.
Yeah. You got wild animals.
There's only there's only 3 states I think in the union now where you can have an active thing. I think Alaska and Arizona, and I believe either Wyoming or Montana. I'm not sure which of the 2 it is, but all the rest are, regulated pretty well. Just remember, the guns don't kill people. People kill people.
Oh, no doubt. You better have a gun up in Alaska, man. I'm telling you, I was up there a long time, and the reality up there, you better have, not only that, just in your car in the winter. That's serious business up there. You
have to be afraid, and you have to have a big gun there because they have some really bad animals that can hurt you pretty badly.
You know what's interesting up there is that actually it's the moose on the road that are really.
It's like hitting a brick building.
It
is. Yeah.
And if you've never seen how big moose get, folks, it's amazing.
Yeah,
it really
is.
They
weigh 1,200 pounds easy.
Yeah,
the size of a horse.
Totally,
that's for sure.
Hey, let's talk the euro. I know you love currencies, right?
Yep.
So what do you think of this euro?
I think the euro made a major top at 119, and we're heading back to at least the 110 level, and possibly a lot lower.
And that would be so. Let's take a look. So is that a 0.618? What do we? Yeah, let's see what we got here. So last 6 months. Oh, that'd be interesting. Yeah, it's a 0.618 from the run the last 6 months.
Lucky guess, just like the address on the building.
I know.
618.
Isn't that cool how I did that?
I love it.
Totally.
That's good.
And that's what we did, folks. So if it's sweet. It's 601 Cleveland Street, but it's 618. And it's so funny when we're moving in here. And I've been in here like 14 years now. Yeah. I said, no, we gotta rename that the suite up there. I forgot what suite it was. Pretty wild. The GLD. So if we take a look at the actual. So this baby come down today. So this is the Street Tax Trust. Comes down $1. You do 5 million shares. You still get the gap that's wide open at $1.20. Yeah.
I don't think you can be bullish until the gold gets above the $1,300 level on a closing basis, and then you break out of those old highs. Then you have a chance. This could actually be very bullish for gold. The pullback, that gives it enough thrust to pull up. The way we were going up into it, all the thrust was gone because we were making, increasing swing sizes to get us there, and that's what causes the problem.
And here, watch what Larry's talking about, because it's so true, folks. What happens is this. It's just like working out. You need rest. I call it building cause. And gold just went straight. We started out at 1211 on July 10th. you go straight up to 1280. That takes a lot of strength. Pull back for 6 days and do it again. I would much rather a consolidation for 3 or 4 weeks in the middle before you go after the high.
Absolutely.
You know?
Yes.
You know, pretty wild. Stay right there, folks. Larry and I are coming right back. See that? We got him for the whole hour. That's a beautiful. You are a trooper, man.
7 more minutes, but I don't know if I can make it or not.
I love it. And of course, don't forget, folks, Larry kicks us off every trading day, 9 to 10 Eastern Standard Time, and all the program. You get right on TFNN on your cell phone. Go to TFNN.com, hit Tiger TV. Larry and I are going to be right back.
At this point.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Oh, very good.
Welcome back, folks. Larry Pesavento, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow up 19, Nasdaq's down 3. S&Ps are up $1.50. And it looks like the good old S&P, once again, folks, is going to close over the high of its downdraft. So bottom line, higher price is still game. 246.44. You know, it's over there. It's like, okay, man. That good old...
Doesn't look like a nuclear war, does it, when you look at it on this chart? I mean, it's basically nothing happened. It matched what we did during, you know, May to June. We just...
2 days.
We did it in 2 days, and now we're heading back. Well, the $64 question is, can we make new highs? And my feeling is that that high that we saw on August the 8th, I believe.
Yep, August 8th, yeah.
I believe that'll be the high that we'll see in my lifetime.
Right.
And I plan to live to be 106, so that's quite a few years. Yeah.
That's quite a statement. Listen, when Basil was on, I was going to tell him, man, Larry and I are going to get our shotgun and shoot that what does he call him?
Cannon.
He has the stock. These stocks drive me crazy, man.
Oh, yeah.
And I'm saying that in a good way, folks. What happens is that, the stock leg. What happens is that he gets the stock leg and he's right, and the thing goes up, man.
Well, I'll tell you, I watch some of the shows. I have a hard time with listening to Basil because that's a really busy time of my morning, but I do listen to the reruns. But boy, it has such great information, as do all of the guests that you have. So you've done a great job with bringing those on. But Basil has a real special flair for what's happening with the market.
No, he
really understands it better than most.
And folks, when we talk Basil, don't forget, tomorrow night, 6 o'clock, 5 to 6:30 actually, you can go over to our website. You can test drive his newsletter for a month. You get into the workshop tomorrow night. You get the first workshop that was done on August 2nd. All of the above. So it looks like we're going to have a flat market out here. So let's go take a look. What is intriguing is this. So, because we both trade the futures there, you can see it didn't hold in the futures.
No.
We got over and closed under. It's a beautiful thing. Well, listen, brother, love you. Thanks so much.
Thanks
really appreciate it.
Thanks for everybody listening to us too. We really appreciate it.
Yeah, totally. You stay right there, folks. We'll be coming back with a bunch of numbers. Have a great one. Have a safe one.
Goodbye, Avery. Goodbye, Mitchell.
Bye, Avery. Bye, Mitchell. You guys are going to be Fibonacci kings.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about action. It's not about attaining knowledge. Market-wise, let's take a look at it out here. We had the Dow Industrials up 5, NASDAQ down 8, S&P's flat, gold contract down $12 at $12.7830, silver down 48 cents, $16.64 an ounce, platinum off $5, $9.63 an ounce, copper off 2.5 pennies, $2.87 a pound, light sweet crude flat, $47.61 a barrel. We're going to have the API numbers coming out at 4:30 today for you folks. EIA tomorrow at 10:30. Bonds, 10-year note, down 12 ticks, 126.05. 30-year bond, down 23 ticks, 154.14. What's going to be intriguing here is looking at the both the notes and the bonds, because coming across the tape was China just reclaimed the top foreign owner of U.S. Treasuries after increasing its holdings for the 5th straight month. China right now, holdings of bonds, notes, and bills rose to, check this out, folks, $1.15 trillion in June. That is up that's up 44.3 billion from the month earlier. Japan owns 1.09 trillion. That's a decrease of 20.5 billion from May. The two countries account for more than a third of all the foreign ownership of the treasuries. And if you want to see something that's pretty amazing, you know, when we talk about notes, bonds, bills, okay, so this is how this works too, by the way, folks, okay? The note, you get the 10-year note, you get a 5-year note. Anything 2 years and less, that's a bill. Bonds, a 10 and over. That's how this shakes out. So bottom line is that what you have here, and I'll show you how this is. If you take a look at the 30-year, what you're going to see, you know, people get worried about that, okay, there's so much foreign debt of our debt in general, meaning the notes, the bonds, and all that. Well, guess what, folks? The amount of money that has been made and on these is astronomical. Astronomical, okay? First off, you're talking about the interest rate that gets paid. Second, you're talking about the value of the principal that has gone up. It's dramatic, okay? So my point is, guess what? Bonds have been going up in price for actually it's more than 30 years now. It's 1980 to 2017, so it's pretty amazing. King dollar up 405 ticks, 93.710. The euro is at 117 to the U.S. dollar. Yen at 110.5 to the U.S. dollar. We get over and we take a look at the oil market. Let's take a look at oil because we are going to have those API numbers coming out at 4:30 today. Oil market out here trading at a price point of $47.60. You're coming back into where you had some strength, 886,000 barrels at 46.38. So the way this is set up right now, I expect we're going to get a little pop in the oil market. You know, the oil market couldn't make it over $50.43. That was the high that was established on the 1st of August. Backs down the last 4 days pretty quickly, actually too. But that's the way it's set up. So it's going to be pretty cool watching where this baby shakes out in another 20 minutes. Gold market, what you have out here in the gold market, what we had with gold market is this. Gold market comes down to $12.72. We are trading right now at a price point of $12.78. The volume expanded on the way down. That being said, what you are doing is that you're going into 291,000 contracts. You did 277. That's where we broke the B point of an ABC structure on the way up. You have the Fed meeting minutes from this last meeting that are going to be released tomorrow. So you're going to get some action inside the commodities, inside the currencies. And if you do want to get into the gold or the silver market, folks, my 800th edition of the Gold Report is next Monday. We're doing a special right now. What the special is this, and it's pretty wild when I think about the 800 editions. That's 15 and a half years. You want to understand the gold market upside down? Bottom line, folks, we have a special going on. You can get 60 weeks for only $600. That is a savings of 50%. That special is on from today until the 27th of August. The 800 edition will be coming out next Monday. And it's been a quick 15 years, there's no doubt about that. When you do take a look at that gold market, 15 and a half years ago, guess what, folks? Gold was trading at $282.50, because I remember that day so well. Bottom line, you know, we'll see where the whole thing wants to shake and bake. And we'll see where this dollar ends up wanting to go. But right now, it looks like well, first off, the gold market is an ABC structure on the way up to 1327. It's turned into a complex one because you back down. You're into the B point again. XAU, HUI, they also want higher price. And what's that all about? The backing down is all about the U.S. dollar, folks, because the U.S. dollar is trading at 93.710. That has gone down since January 3rd. We went from 103, hit a low August 2nd at 92.390. Came off the low, and we came off that low with 31,000 contracts. We took that out today with 22,000. So now what you have is that you're building, it looks a B to a C of a much larger ABC structure on the way down, because what's sticking out now like a sore thumb when you put this on a continuous contract is that you have the 88 area sticking out, and I suspect that's exactly where we're going to go after we finish this B to C. The 88 area in the dollar is the highs from 2008 as well as 2010. You break 88 and we really got some trouble with the U.S. dollar. What's bad enough that it just went to 103, down to this 93. Bottom line is that it does make it less expensive for our large companies in the U.S. to sell goods overseas. You stay right there, folks. We'll be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 5, NASDAQ down 7, S&P's flat. Let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday and Thursday. at 20 past the second hour. Andy Folks got a great show right here at TFNN. Every Tuesday, Thursday, 5 to 6 Eastern Standard Time. You can get that show right on your cell phone. You go to TFNN.com. You hit Tiger TV. You're going to get some great HD quality video. Andy also got a great newsletter. He has 2 of them, in fact. He has a daily newsletter called Daily Essentials. He has a weekly newsletter called the Technometer Commodity Report. You can come over to our website right now, test drive both of them, absolutely free for 30 days. Andy Heck, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
I'm doing good. So today, turnaround Tuesday in the commodities markets, and for the dollar as well. The dollar kind of bumping up against 94. We actually got above there, and commodities took it hard. Silver, lead, precious metals down. That was ugly. The agricultural commodities just took it on the chin.
Yeah.
I mean, grains and all of the softs, with the exception of orange juice, everything sharply lower. And I'll tell you. You know, last week we had that big correction in the stock market. Yesterday we had Bill Dudley come out, the Fed president, and say that, you know, the Fed's going to take up balance sheet normalization, which accounts to like QT or quantitative tightening at their September meeting. Bonds went lower, the dollar went higher, commodities went went lower rather, and it seems that, you know, the situation in North Korea a little bit calmer now. Administration basically saying they're committed to a peaceful resolution. The guy in North Korea basically calling off sending missiles over to Guam, and I guess we're going on vacation for the rest of August. That's the bottom line.
Yeah, we're in summer trade. There's no doubt about that. You know,
right.
I mean,
until Labor Day, I have a feeling, you know, these markets have dealt with so much over the last couple of weeks. The markets need to take a breath and trade within their ranges.
Yeah, see, I don't. Anyway, I just that the Korean thing's been going on forever, man. That to me, you know, is entertainment that, you know, is basically, you know, you can get hung up on it. But guess what?
However, it did affect the stock market last Thursday. It did. I mean, I didn't see, you know, any other. I mean, that coupled with the fact that, you know, the Senate Majority Leader is feuding with the president, and nothing's going to get done in Washington, and the stock market kind of realized that tax reform isn't getting done anytime soon. You know, those two things caused the stock market to drop. But now, you know, old news. I think we're just going to trade in a range here.
Yeah, it's listen. So you got we're at the 15th of August, and you know you got Labor Day in 3 weeks.
Right.
You know,
2.5 weeks. And you know what? Traditionally, when it comes to Europe basically shuts down in August.
Oh, for sure. Yeah,
right. For sure. So you're not getting any news out of there.
So, hey, what do you think? I mean, you know, Larry Pesavento was doing. He's in town, so he was doing the show with me. The 3 to 4. And,
I know. I was watching out of the corner of my eye.
Oh, cool. And so, you know, I mean, that wheat is a mess. Now, soybeans isn't that bad. I kind of like how soybeans are looking, man.
Yeah, they're kind of all a mess here. You know, they're ugly. But they're all very deeply oversold after the recent market action. And we still have a little bit of time. But the bottom line, Tom Wozdy told us, 2017 is the 5th straight year of bumper crops.
Okay.
And, you know, while I do think you could get some bounces in these markets, you're not going to get any explosive moves like we saw in late June and early July. And it's better to turn our attentions to other seasonal commodities now, like natural gas, I think.
Well, yeah, we're going to get the API numbers in 8 minutes on oil.
Right.
Natural gas we're going to get Thursday morning.
Right, and natural gas, the inventories this year, the amount of natural gas flowing into inventories is a trickle compared to what it's been in past years. And I don't even know if we're going to reach, I mean, I don't think we're going to reach 4 trillion cubic feet this year. That'll be the first time in, you know, in 3 years that we haven't reached that level.
And that's a big deal, right?
Well, it's a big deal. We could go into the winter season at the same level or even below where we went in at the beginning of 2014.
Right.
And in 2014, natural gas went to $6.50 per million BTUs. Another interesting thing, not that I put any big credence in it, Tom, but The Farmer's Almanac came out the other day.
Okay.
And they predicted a cold winter for the Northeast corridor.
Really?
Now,
okay.
Whether they're right or they're wrong, there is a chance of a cold winter.
Oh, yeah. Listen, man.
Right?
Hey.
Right. There's a chance. And if there's a chance of a cold winter, then you know that demand for natural gas is going to rise during the winter season. And if we go in with inventories low, that's going to bring them down to a very low level.
Yeah, because
and you know what, Tom? That's going to make the price go higher. So at under $3, I think this is interesting here.
What, Andy? The injection. So I know you've been looking at like how much injection are you thinking that we need, or just ballpark per week, in order to get that $4 trillion?
Oh, I know exactly. You need 70. I'm going to have to look it up. I wrote it down before. It's something like 74 billion cubic feet
per week.
We've only had. Right. We've only had a number that high twice this injection season.
Right.
We only had an injection of over 100 BCF once. That's not the norm, Tom.
I see.
You know,
okay, cool.
What you're seeing in the natural gas market is two factors that is making the injections much lower and making natural gas more of a year-round commodity from the demand side.
Yeah.
Number one, you got power, electricity that's being generated more and more by natural gas as coal is in the graveyard.
Okay.
Okay. And number two, you have increased export demand from liquefaction.
Right. Which is huge.
So,
that's a big deal.
It's huge.
Yeah.
By the way, it's not even reached what it will. You know what I'm saying?
Now, is there more? Is it just Share that's doing that, or is there more companies? How does that work? Do you know?
Oh, Cheniere is the leader, but there will be others.
Okay.
No question. You know, the ships are going. They're going to South America. They're going to Asia. But that we haven't even reached the tip of, you know, we're not even close to what the potential for that business is.
Sure. Right.
And, you know, the two major producers of natural gas in the world are the United States and Russia.
Okay.
And technologically, we're far ahead of the Russians.
And they get a lot more for their natural gas over there, though, don't they?
They do, because they ship it to Europe and they hold everyone hostage.
Yeah, yeah.
You know what I mean?
Sure.
I mean, it's not a free market like we have here in the United States. That's priced off Henry Hub. The companies here deal at world market prices. The Putin deals at extortion prices.
Yeah.
You know, he can.
Sure, right. No, that whole fight about that in the Ukraine forever. That's been going on forever, right?
Exactly.
Yeah.
So you know, we are a more reliable supplier of natural gas, which means that, hey, last couple of years, natural gas went down to $1.6110 in March 2016 because of all these huge discoveries we found in Marcellus, the Utica shales, all of this fracking. You know, and even though we're going to continue to frack and continue to extract this stuff from the crust of the earth, the addressable market for U.S. natural gas has just expanded from a country with 350 million people to a world with 7.4 billion. So do the math.
7.4 billion. Right? You stay right there, folks. Andy and I are coming right back. And, of course, we're going to get those API numbers for you and the oil market. Right now, those are going to be coming out in 4 minutes. Dow Industrials finished up, 5. NASDAQ down 7. S&P's flat. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. And let's see if we get in here. Let's see what we got with these oil numbers. Let's see if I can get a real chart up here for a second. We just, let's see, we just popped slightly. I'll get these oil numbers, but it looks like we just went from, 47 to 47.25 to 47.72. Now, what gets intriguing here, Andy, right, is that's how this chart is actually also set up, because we pulled back into where we went topside from on the 25th today, and we only had 700, let's see, yeah, 720,000 contracts versus that 886. Yeah. Andy? Did I lose him? Al? Andy?
Yeah.
Thanks, man. Okay, sorry.
Sorry, you got me?
I got you, man. I got you.
Oh, okay, good. Good. I was saying, oil doesn't look terrible. The crack spreads is still, they've come off, but they're still much higher than they were in June. That's both the gasoline and the heating oil. And you have Brent now trading at like $3.10 over WTI, which tells me that China is buying oil here. So, you do have some demand, and we've had serious withdrawals from inventories over recent weeks. We'll see what today's are.
Yeah, totally. And so here, let's go. So API said to report U.S. crude stocks fell 9.2 million barrels last week.
That's huge.
Yeah. So
that's huge.
Yeah.
What'd they say on gasoline?
You know what? It always takes a second for me to get them, but
gasoline is just as important. For driving season, we want to see what demand is over there. But that's a massive number.
Yeah. It just popped oil from 47.60. We're at 47.83 right now.
Yeah, and if the EIA follows through with a similar, even if it's 7 or an 8 million barrel draw, wow, we could get a nice rally back to $50 here.
Yeah. Hey, you want to hear a massive number? Now, this is a trip, folks. This is pretty amazing. Bonds. So China just reclaimed the largest position of foreign-owned as the top foreign owner of U.S. Treasuries. So, Andy, check this number out. As of June, they own $1.15 trillion and bonds, notes, bills. How's that, right?
That's a big number.
Isn't that crazy? Now that's up from 44 billion in a month. And Japan is just as big. Japan owns 1.09 trillion. That's down 20 billion. But isn't that intense, man?
Japan owes how much?
1.09 trillion.
So basically, between Japan and China,
yep,
they hold half of the amount of the debt that the Fed has outstanding on their balance sheet.
Yeah, how's that, right?
For quantitative easing.
Yeah. And
that's huge.
It's huge. And see that when this quantitative easing, starts running down, folks, this thing's going to be slow, man. The Fed said that when it starts, the first year, they're only going to go to $10 billion a month.
$10 billion a month.
That's nothing.
Yeah.
That's a joke.
That's a pimple on an elephant's rear end,
It really is, man.
Yes.
I mean, that is not a big number,
No, not a big number. But 50, 50.
Oh, once you get to 50, after the first year, they're saying they're going to go to 50. That's a big number. Yeah.
Yeah, that's 600 a year.
Yeah.
And by the way, if the market is comfortable with 50 and the economy is expanding, you can be sure that they'll go to 75 or 100.
Yeah, yeah.
And they want to get this off their balance sheet ASAP.
Yeah, I'm not too sure about that. Do you know what I mean?
I think that's the course that they've decided on.
Oh, that's a course for sure. But when I look at the aspect of our 10 years, it's still at 2.2. And France is at 0.7%. Germany's at 0.4. It's like it doesn't make any sense to me. You see what I'm saying?
Wouldn't you, as a trader, want to get this off your balance sheet as soon as possible at these high prices before it goes lower?
It doesn't matter to the Fed.
I know it doesn't. It doesn't. I know
because they get the money anyway. It doesn't. It's like they know exactly. So that's a great question because they don't lose any money because the way that they're coming off the balance sheet, they let them expire. They're not trading these things.
But we do lose money because we do have to fund the U.S. debt at a higher interest rate as the bond prices fall.
Yeah, but no.
Well, we could just print more money.
No, because what has happened is that we're actually issuing less bonds the last 2 years than we have because of the amount of money that's come in the Treasury. So there's less bonds going out than ever expiring. That's why that's why there's a disconnect also in the supply and demand. Isn't that crazy?
It is crazy.
Yeah,
it's crazy.
And so what is going to be really intriguing this year is to see that, okay, so if folks, depending when they sold, you get a market that goes to the moon, is at the moon, right? Well, everyone that's selling is going to be paying big taxes because the tax bill's not going to be done by December.
Right. They are going to have much bigger tax flow this year than they had thought because Congress is never going to get their act together.
Not in 90 days. No way. So here,
you say not in 90 days. I say maybe not in our lifetime.
Yeah, no, I agree. I agree with that.
Okay.
I get the numbers for you. So here's the numbers.
Awesome. Here we go.
Okay, so Cushing, you had a plus 1.7 million barrels.
Okay.
Gasoline was plus 301,000 barrels.
Not big.
Distillates was minus 2.1 million barrels.
That's a bullish report.
Yeah,
in my opinion.
Especially because I guess the crude itself was down 9.2 million barrels. That's the big number, right?
I'm not sure what the market was expecting, but I know they weren't expecting 9 billion. I think they probably were expecting a draw of about 2 million or so after last week's, which was a big number.
Right.
Listen, these inventories are coming down sharply. There is no question about it.
Yeah.
Crack spreads are higher. Brent is trading at a big premium to WTI, which is telling me two things are going on. One thing, the shale oil producers, when it got to 50, they were hedging again.
Yeah.
So that depresses WTI. And China is buying oil because they're buying everything these days. They're buying iron ore. They were buying copper. If they're buying those, they're buying oil too. I can guarantee that. So this Brent spread at 310, that shows demand. So you see demand there. You see demand from the processing spreads. You see a tighter curve. I like oil here. I think oil, I think
it's probably going right back to
50.
50 probably, right?
Yeah, I think so. I think so. But the only thing that could weigh on the oil is the dollar. Because if the dollar is going to go to 95 or 96, that could balance this.
Yeah.
And it's very possible for the dollar to bounce to 95 or 96. Easy. But I tell you, Tom, I want to be a scale-up seller of the dollar up there.
Oh, yeah, listen, I think 88, it looks like 88 is going to be game.
I agree.
Unreal. Well, listen, man, we look forward to the show in 20 minutes, Andy.
All right, brother, thank you.
Thank you. Stay right there, folks. I'll be coming right back. And, of course, Andy's going to be coming up with you at 5 o'clock. And remember, right on your cell phone, folks, go to TFNN.com, hit Tiger TV. Coming right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi, everyone. This is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. And if you, as you come over to our website, folks, at TFNN, you are going to see in the top of the carousel, coming up next Monday is going to be my 800th edition of the Gold Report. And we're doing a celebration. That celebration is a promotion that you can get 60 weeks of the Gold Report, which is over a year, for $600. That's $10 a week. The Gold Report started 15 and a half years ago. Gold was $282.50. Pretty wild. If you have an interest in the silver market, the gold market, check it out. You can take advantage of it right now. will be in place, and you can get this until August 27th. Next Monday is going to be the 800th edition, and $10 a week, that's a 50% savings of what the gold report normally is. If you are a subscriber now, you can take advantage of it. If you're a new subscriber, you can take advantage of it. Let's go into Bitcoin. You know, it's pretty amazing. You know, gold's been around forever, right? Bitcoin hasn't. That being said, though, guess what? The amount of bread that looks been made in Bitcoin is pretty incredible. Bitcoin hit a high out here, and I'm not suggesting you go get Bitcoin either, folks. I don't know enough about it at all. I think we're all going to get educated on Bitcoin quite a bit, and we'll see whether it's at 20,000 for a Bitcoin or at 1,000. Right now, this baby hit a high out here today of $4,449.86, and closes out at $4,040. Well, it doesn't close out. Bitcoin trades 24 hours a day. That's what it's trading at right at this particular level. It's an amazing run. There's no doubt about that. Because if you do bring Bitcoin back, what you're going to see, it wasn't too long ago that you could get this thing. Yeah, 2015. You know, actually, let's go right to 2 years ago, to the exact day. So 2 years ago to the exact day. There it is, the 15th. I got it on a weekly. Okay, the week of the 14th, $262. That's pretty wild. That's interesting. Because the low in gold was $252 in 2001. Look at that, 262 to 4,449. That's amazing. And you know what we are going to see here. Let me bring this up because this equity here, I want to see what this equity is all about. So this equity it's called Bitcoin Investment Trust. Bitcoin Investment Trust is open-ended grantor trust based in the United States, sponsored by Grayscale Investments. It is invested exclusively in Bitcoin and derivatives and derives its value solely from the price of Bitcoin. The trust's objective is for the net asset value share to track Bitcoin's market price. Okay, so this is pretty cool. So watch how this is going to work, folks, because what ends up happening is that I'm going to put two of these up here, because what I do have on this machine is, and we're going to find out how close this actually tracks the net asset value, because this is crucial. They're claiming that they track the net asset value, and what I want to really try to figure out is that off what market. That's what it really comes down to. Off what market are they tracking it? Now, normally, what happens, if you happen to be watching Tiger TV, what you're going to see is that the net asset value, this is crazy. Yeah, they don't even have it here. The bid-ask spread. The low, oh, I see what they're doing. So this is what's going on. This is trading at actually, no, it's not trading at 10% of it. What they're doing, yeah, this is pretty hard to figure out. So normally what ends up happening, if I bring a net asset value up, it gives you the exact net asset value. Well, no, I see what's going on here. Okay, so what's happening is that their objective is for the net asset value per share to track the Bitcoin market price. Now watch this. This is insane, folks. If anyone's buying this, oh my God. Okay, I've seen this happen before, but this is pretty intense. Okay, do not touch this thing. So let me go through the description of this security first again. It is invested exclusively in Bitcoin and derives its value solely from the price of Bitcoin. The trust objective is for the net asset value per share to track Bitcoin's market price. Well, it's not doing that, folks, because what you have is that the NAV, net asset value, would be $386.52, okay? Guess what? People are buying this at $685.01. The premium, so this is a premium oh man, this is intense. This is a premium of 76.83% that people are actually buying this trust, when in fact, if you're going to buy Bitcoin, why wouldn't you buy Bitcoin? Why would you spend 76% more? This is pretty amazing. And I guess we're going to start tracking this right now. Yeah, it's like a closed-end mutual fund, which it'll go from negative to positive, which is pretty amazing. And that's saying there's too many buyers. Now, the volume on this, it's been trading average 40 to 50, 55,000. Last week it started trading 58 to 80,000. The high was yesterday. It traded 141,000 shares. Today it traded 127,000 shares. The sad part here, folks, I'm sure that many of these folks don't understand that they're buying something with a 76% premium when, in fact, okay, because so picture, you're buying a share at $685, when, in fact, they could, if they wanted to buy Bitcoin, well, just go buy Bitcoin, because you're going to get it at the price. It's trading. That is insane. So this is crazy, too. The market cap of this, folks, is $1.28 billion. The shares outstanding, 1.9 million. And this is going to end up being a scandal. We're going to end up reading that no matter what happens with Bitcoin, meaning that, you know, if it's success beyond belief and goes to $30,000, $40,000 per coin, or goes down to $2,000 per coin, we'll end up reading about this trust. And the reason I suspect we're going to end up reading about this trust, because of the fact that at some particular point, this will come back to the net asset value, because that's all it's backed with, you know. And when you're not talking a stock that has more earnings, and, you know, you could, here, like a growth stock. What happens with growth stocks, right? If we go over to Tesla. So picture, Tesla is a company that loses money, but yet trades at a high value, right? Amazon makes money, they trade at a growth value. That can actually get up to those price points. When you're talking a tracking stock, it's net asset value. That's all it is. So that net asset value is going to go down. And right now it's a 78% premium. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Volume-wise out here, let's take a look at what we have. So you got a flat to slightly higher market. NYSE 700 million shares versus 744 yesterday versus 859 million on the downdraft. NASDAQ Composite 1.5 billion versus the 1.8 and 2.2 billion on the downdraft. We go to the SPY, the SPY. SPY out here today did 54 million shares. Yesterday it did 73. You're going into 120. So that's a correlation that it wants lower price once again. You go into the Qs. What do we have with the Qs? Same setup. This is a nice setup. Okay, so Qs today did 25 million. You did 34 yesterday. You're going into 63. Small caps. Let's take a look at the small caps. That is the weakest indice right now, by the way. Small caps out here today, folks, did 16 million. Versus yesterday of 21 versus your downdraft of 40. Now, the difference in the small caps also, and that's why this is the weakest indice, the small caps opened at a price point today of 138.80 and then just gave it up. They're in the lower range. Small caps were down and actually stayed down. So the IWM looks like it wants to run to 127. You're at 137 right now. In fact, the small caps are trading where they were trading in December of 2016. We actually pull up the indice, the Russell 2000 that the IWM is trading off of. That's at 1383 right now. Same type of setup, meaning this looks like it wants to trade into 1282. We are at, let me pull this, same thing, December of 2016. Yeah, December 2016. Well, we're still, we're in 2017. So bottom line is that I expect, number one, you're going to get down to the lower end of this, which is the 1335, and we'll see whether they get inside the lower range. So 1295 would be the lower range. You stay right there, folks. I'm Mr. Andy Heck's going to be coming up, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Go have a blast with it. Thanks for being here. Look forward to speaking to you tomorrow morning at 9 o'clock. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.